Manoj Muralidharan from India IIFL as well joins in to talk about the futures and options side of the market. Manoj, your thoughts on how the series went by and what are the indicators that you've picked up for the next series? Which way is the market headed?
Good morning, Aisha. Like we all know, FIs usually dictate a lot the direction in the market. Now, day before when the S&P news is coming, if you look into the cash figures of FIs, they hardly sold around 300 odd crores. And couple of days before that, the selling was almost 1,500 crores. So I feel, this news was more or less discounted and the selling had come in because the Nifty had actually tanked somewhere close to 100 odd points right from Monday till Wednesday when actually the news came in. Now, a couple of other indications. I mean, a lot of analysts are actually worried about the open interest that happens in, because we're not really seeing good amount of open interest pile up in Nifty. But the thing here is, whenever we look into the FI stats which comes in, so that is an summation of your Nifty futures, your Bank Nifty as well as your CNX IT. Look into the Bank Nifty, it has actually gone almost 1.5 lakhs more than what the open interest we had last month. Needless to say, the rollovers are much better as well. But looking to Nifty, yes, it is lesser than what, last time we had somewhere close to a 2.09, we started the series, and this time we are a bit lower, somewhere close to a 1.83. Needless to say, Aisha, the reason is, usually 5 to 6 days before the expiry as well, you see the FIs trading a lot, somewhere close to 1,500 to 2,000 crores in index option. But this expiry, we're not really seeing that, Needless to say, the hedge ratio, which simply says the extent to which the market is hedged, you simply divide the Nifty open interest with the entire market wide, saying what is the hedge, that is very low. It is somewhere close to 1.32 versus a general 3-month average of around 2 to 2.01. So what I'm trying to say here is, yes, there is, the last 3 days of expiry till Wednesday, there was long rollovers happening in Nifty, definitely. And it was Thursday that we saw there was shorting which is happening. So I am not really bearish, at least for this month. Usually what happens is, there is something called as a reverse analysis which happens in derivatives. So till the extent the VIX does not fall below a 16.8, which is very crucial. Second, the 3-month weighted average somewhere close to 5298. We see these parameters taken off. And I'm sure Nifty can take a bottom somewhere close to a 50-50 or let's say a 5100. Now that happens because we have seen good put accumulation at that point, and we might even inch back to a 55 for this series. What I feel is May would be at least a 6% series, wherein the expiry to expiry can be at least a positive 6 or a negative 6%.
6% series, which means you expect Nifty to appreciate by 6% in the month of May?
Absolutely. Expiry to expiry, Nikunj, it can be around 6%.
6% means what, about 300 points?
Absolutely.
So are you betting on a number of 5,500 plus?
Somewhere close to that. Nikunj, there are 4 indications as I said. First is the VIX should not be falling below a 16.8. The reason here is, if you remember in the April contract, the VIX was somewhere close to 28 and we fell down to almost 18. Now obviously the correlation for Indian VIX is only 0.92 versus the CBOE US VIX which is at 0.96, which simply says that, the Indian VIX is, the correlation is less and there is a co-linearity which simply says that if we see the VIX falling below 16.8, that simply says that the lack of participation is it's decreasing more and we would be seeing the money flowing out. The analysis what I am trying to focus here is the FIs have still not taken it seriously and we have still not exited the Indian market even on the derivative and the cash market, because net for the month in April they have shorted stock futures somewhere close to 1,400 crores and the cash selling is not more than 300 odd crores, but the index they have hedged with somewhere close to minus 800 odd crores. So that is a hedge which happens, so if the Nifty comes down to 150 points, this essential hedge what they have done will definitely give them a cushion for that 100 points. But a fall beyond that is when we will see the pain coming. So as of now, I still feel it is a 6% month and somewhere close to 5,000 or 50 we might see a bottom, and then possibly it can be a 6% like 300 odd points on Nifty.